Yo guys, welcome to episode 6 of Trading for Dummies. We have imbalances today. Imbalances and fair value gaps, whatever you want to call them. Let's get into it. So, to put it simply, an imbalance is imbalanced price action. This is just where like price is imbalanced and it's not balanced, and it wants to seek to balance it out to then move in a given direction. So, your typical imbalance looks something like this. It's just a bullish imbalance is just a big expansion and there is a gap between the top of this wick and the bottom of this wick. A gapperoonies. That is a fair value gap because this big move to the upside means there was no time for sellers to have any orders in this area, and there's no sell orders whatsoever. There's an imbalance in the price action, pretty much. And what will price want to do? Come down, fill out the imbalance, and then go higher. Typically, you use these type of imbalances as retracements. So you want to see it come into it, retrace into it, and go higher. And then you also have a bearish imbalance. So it's a similar situation, except it's just a big expansion down this time. Where there is a gap between the bottom of this wick and the top of this wick. If this wick was like this, in line, or past this wick, like that, for example, no imbalance. There's no gap. There's not a fair value gap if there's no gap, quite simply. So typically you want to see it come up into this imbalance, fill out the imbalance, and rebalance price action, and then go lower again. Quite simple. Jumping into the chart, you can see there's one right here. Top of this wick, bottom of this wick, big move up. Price wants to come back in, fill it out, and it's likely going to go up from here. Similar to this one, wick to wick, fill it out, go higher. Happens on every time frame. And go into the 5 minute. Here we see one right here. There's loads. We came down, made this gap, big expansion. There's no buy orders in this area. We come up, refill it, we go down. It is quite simply that. It's just an imbalance. Price is imbalanced and wants to rebalance price action, pretty much. Now, these fair value gaps can be invalidated, which we can also use as a confluence. So if you remember, we had the drawing. I don't want to draw out again, but say we had a gap here between, this is a bearish gap, for example. Oh my god. There's the wick. There's the big move down. There's the next wick. And say you've got this big gap. And then this could be invalidated if we get a candle close above. So the next, well, not the next candle, but a candle closes above the imbalance. That would invalidate the imbalance, and that can act as a confluence as well. That's what I like to use sometimes. So we see this big this 4-hour imbalance get made. And you see we come up, we fill it, and then we push right past it. That shows us that the selling momentum we had here was disrespected and pushed completely through. So we can use it as a confluence and say, okay, price wants to go higher still. Similarly, on the 5-minute, I was like to use as an example. Here, we see this 5-minute imbalance get invalidated. So that shows us the buying momentum that was there wasn't respected, and we just pushed right through this imbalance. And that has the potential to change our bias or fulfill our bias and enter off of. But quite simply, that is what imbalances are. I can't really put it any simpler. It's just imbalanced price action, and price will usually want to fill it and then go lower, or come down and go higher. So use it as like a retracement to get entries off of. And then it's important to know that imbalances are everywhere. So you use your bias to determine which ones will get respected or not. And if they get disrespected, you can use it as a confluence as well. On the 1 minute, imbalances are literally everywhere. They're everywhere, and they get like respected, disrespected all the time. So it's important just to keep that in mind. Imbalances aren't the be all and end all of strategy. You can't just like enter long or enter short of every bullish or bearish fair value gap. You can use it with other stuff as well that we'll cover later on. Another form of imbalance can be like gaps. So you see here a daily gap, for example, price closed here and opened here. That is a gap, an imbalance, because it closed for the day there and new day open there. And as you can see by these wicks, instantly we filled that gap. So I like to use gaps on the 1 minute typically, like in line or similarly to how I use imbalances. If there's quite a big gap, for example, I can't really find one, but here, really, these little candle gaps, you can see you got filled out, but really we're just filling out this imbalance. So, but that's it really for me. Imbalance price action. That's how you spot them. Wick to the wick or wick to the wick. From a big move up or a big move down. They're everywhere. It's important to know when and when to use them. When and why, sorry. If you want to see imbalances get used, my trade recaps cover. I use imbalances almost every trade. It's one of the main confluences I use to go off of when I trade. So just watch the trade recaps, really, and that'll help get an understanding of what imbalances are. I mean, if you've watched them already, you probably have quite a good idea. But if you haven't, go watch them. I use imbalances every day when I trade. Yeah, that is imbalances done. Explained it as briefly as possible, just to give you that simple understanding. I hope that helps. I'll catch you in the next one.